Good morning, traders. This is Austin. Welcome back. Day 2 of 3, chronicling the CM-Scalper trading approach for crude oil futures here, CL. It's 7:35 a.m. I've been at the screen since a little bit before 7. Pretty much my working hours standard are 7 a.m. to noon Eastern time right now, and occasionally I'll trade the afternoon stretch, depending on circumstances. In any event, we have a buy signal pending at 52.15. This is a breakout situation because price has tested the key support resistance zone a couple of times. It's bumped it, and so it's quite likely to fire straight through there and keep on going continuation trend fashion if it does. And so I have a automated stop in here for 5 ticks. If this triggers and stops out, then it's going to be a 5-tick loss, and then we'll adjust from there. But basically, trading is very simple, and I've been at this for a long time now, a dozen years or so, and I've complicated the hell out of it through those early and middle years trying to figure out the holy grail and so on and so forth. When in reality, if you keep it simple and you just identify key support and resistance and you trade pullbacks and or breakouts around that, you know which way price is likely to go more often than not statistically. That's trading. That's how you create long-term success. Keep it simple. I understand that's an old cliche, and I understand the human mind rejects that because the human mind gravitates towards complexity. We naturally assume that if simple is good, adding layers of complexity to it makes it even better. I'm here to tell you it does not. So, simply speaking, I have a breakout long pending, and we'll see what happens after that. One trade at a time. It is 7:37 Eastern. Okay, it is 7:43. We did not get that resistance breakout where I was looking to work 2 contracts for on a 5-tick stop, but instead we have a pullback to recent support congestion. So I'm trying 1 contract, same 5-tick stop, to that pullback, and it's either going to chop or it's going to hold, one of the two. If it chops, then that's it, and that's my only attempt at the pullback to congestion here, and then I would look for a breakout situation outside of the congestion above, or possibly the sell side going the other direction. So we'll see what happens here.
Stop
but
filled.
For now, yep, kicked out for now. Sideways, as you can see on the 5-minute chart here, there's just not a lot going on. So sit, watch, and wait mode. Never know with crude. I mean, anything can happen at any time, so you have to be on your toes. But at this moment in time, I would be looking long in the 52.15 area again, or nothing else. 7:44. Okay, quick update. It is 8:08 Eastern. Price topped out here at the prior resistance, rolled over, broke down through here, gave a sell signal on the short-term chart, and I placed it did this and that, and then it quit too quickly, so I placed a sell order 51.90, and it didn't fill. It came up to like 87. It missed by 2-3 ticks, and now it's rolling lower. And hey, welcome to crude oil trading. It's a fast-paced market, and sometimes you get filled and sometimes you don't by random chance. It did this quick blip here, and then I placed that order there. I'm sitting here, it's doing that blip blip. I placed the order here. I wanted to be short 51.90. It didn't fill, and now it's 40 ticks or thereabouts in favor of what would have been that trade. And that's the life of a crude oil trader, so we just wait and see what's next. 8:09 Eastern. Okay, 8:50 a.m. Eastern. Quick update. We have the pit session. Get started in 10 minutes. Like I said, did not get filled at a pullback attempt here, which is basically the opposite side of the support resistance. They did not break resistance, and then they broke support here too rapidly, and then pull back. Now, a lot of times I'll talk to traders. They'll say, "Do you Do you trade breakouts? Because I'm a pullback trader. I like to trade pullbacks. Well, there's a fallacy out there. It's a falsehood amongst traders, and it's perpetuated by greed, by the greed emotion, that pullback trading is better than breakouts. And that stems from traders who take breakouts, and then they get stopped out with that right about where they think that a pullback would have worked. And so they become pullback traders by nature, only to discover that that's not the holy grail either. Because when you target pullback entries solely or specifically, one of three things is going to happen. You're going to get filled, the stop's going to hold, and the trade's going to work. You're going to get filled. It's going to pull back deeper than you guessed, because that's all pullback trading is guesswork. It's going to pull back deeper than you guessed, and you're going to get stopped out for a loss. And then the third scenario is it's going to pull back shallower than you guessed. You're not going to get filled, and you're not going to be in the trade. 1 out of 3 scenarios for pullbacks results in profit. The other 2 results in you get stopped out if it comes back further than you expected, or if it comes back shallower than you expected and you don't get filled. And there is no workaround there. It doesn't matter if you're scaling in multiple contracts here, there, and the other place, because no matter what you try, some of the pullbacks are going to be shallower than any of your attempts, and some of them are going to be deeper than all of your scales. There is no way to overcome the fact that pullback entry techniques are nothing more than educated guesswork. That's it. In my particular case, I trade them, but I much prefer breakouts, because breakout trading can be quantified much greater. 8:53 Eastern, waiting for the pit now. Okay, got a little hectic here on the open. First we have the open range confirm, and then now we have price action breaking out of a pattern sequence. I've got just a single contract, one in a 5-tick stop at this moment in time, because we're trendless for now. We're inside of a congestion zone. So I'm looking to add a contract here if price continues onwards, and that would be at, let me see. It would be at the 51.95 area. Above 51.92 actually. So I would add somewhere like 92 or higher and blend the stops. See if she takes off. Heading towards, let's put that open range on here. And the open range is from 45 to 80 plus. So there's the open range. 52.20 is the 233, and then 52.60-ish is the roadmap 1. So if they get off this congestion zone here, then I would add, if they just chop this out, I'd be looking to get long again somewhere, but for now I'm going to add around the 51.92 area, given a chance. So one thing at a time. Sit, watch, and wait. Okay, update. It is, time is it, 9:24. The initial long trade stopped out, and then let's go to a 1-minute chart here, break it down. Initial long got short, and then it made a successful pullback to the top of the open range and lower congestion. So got long again at the 70 mark, and then added up around above 90, like I said, and that's the blended position that's currently working, with 52.20 plus being today's 233 up. You know just as well as I do the statistical probability of that mark being hit is 90% or greater on any given day. Today is one of those any given days. Now whether it goes up and does that right from here, whether it pulls back and chops out my stop, whether it never does that at all is unknown. Okay, but the statistical odds are, if we manage our trades in the same fashion every single time, 90% of the time we're going to be in the correct direction, and a lot of those times it's going to work out. I don't know if this one's going to work out. Nobody does. So you just take your chances, you work the sequences, and you let random odds of probability play out. That's trading. Nothing more to it than that. It's a statistical game. Currently 9:26 Eastern. 9:31. That certainly didn't work out. Just the way it is. The position went to 82.05 and then chop slammed right back. It's just a messy range morning so far. Nothing going on. Directional. So you stick with it and keep working the support resistance zones until something makes a move somewhere. 9:32. The New York Stock Exchange Casino just opened, along with Nasdaq, and that'll shove things around as the spreaders cross one symbol to another. So we got just range pounding here, a nowhere's day so far. And Yellen gets started in front of Congress again at 10 o'clock for her rehash. I don't know what else is going on. Maybe some other econ reports. I'm not exactly sure. Just it's not my job to know. It's my job to work support and resistance. 9:33. How about an update? It is 9:51, just about to begin Yellen Act 2 of the semi-annual Humphrey Hawkins testimony. We have price trading inside of layers of actionable support resistance sequences, and I have layers of entry signal stage. I've got 5160 and 50 short, and I've got 5185, 5202 long. So if price makes its way up or down through that scale, I'll just cancel orders on the opposite side and work the stops. For now, price is congesting inside of the open range. That is neutral to bearish, and they failed to go up. Could be they're going down next. We'll see. 9:51. Okay, it's 10:01. We've got price action whipping around here.
Order pending. Order canceled.
Stop to scratch or par. I'm currently minus 12 ticks in the chop, and so now we have plus 2 ticks on the blended entry here, and sit and hold. They are trading around the bottom of the open range. If they don't rip this one out in the chop, they should be headed down here. If they rip it out in the chop, they're heading nowhere, and then we'll readjust. It's got one of those range chopper days written all over it. So because everything has just been V-turned all day, impulse move, snap back, impulse move, snap back, and I call this back chop. Impulse move, back chop. Everywhere every move that it makes, it chops back the opposite direction. We've seen this a ton of times. So playing the odds of probability, this or that or both are 90% probable today. One, the other, or both are 90% probable. And you know as well as I do, when price action is at or below the bottom of the open range, this one here is the most probable. So we just sit and wait and hold for that. Some days neither will happen, and you'll just take a bunch of trades and they'll all get chopped around, and whatever the results are, minuscule profit, minuscule controlled loss, doesn't really matter. It's the same thing. A tiny gain is no different than a tiny loss. One is not better than the other. The only thing that matters are the days in between when when price makes distant moves, your objectives are hit, your profits are moderate to large, and there you go. 10:03 Eastern. Okay, we'll update. It is 10:05. I have 12 ticks cumulative locked in here, which is the current draw. So if they come back and take this out, I'm back to break even for the day, and then I'll reassess. Meanwhile, I've never been more optimistic about this particular position than right now. The last thing I want to do is take this trade off right now because it's working to the best that it has right now. I don't have the benefit of hindsight. I don't know if it's going to fail or if it's going to succeed, but I'll tell you this much. This I know for sure. If you screw around with tiny profits and scalpy scalp gains of a couple ticks here and a couple ticks there, your trading will never amount to anything. You will never make money in this profession until you can sit through the gyrations and hold for targets and book moderate to large gains. Nobody, with zero exceptions on the retail side of trading, has ever made long-term profitable success by scalping a couple ticks here and 10 ticks there and 8 ticks the other place. I understand a lot of traders fantasize about that being possible. I understand it falls on deaf ears and a lot of people don't want to hear that message, but that message is true. Until you get good at targeting directional trades and sitting through and holding them and capturing them, you will never make solid, substantial, impressive gains over long periods of time in trading. You've got to catch the directional runs. You've got to let your winners run and cut your losses short. Looking to manage this one at 20 or better, and that would be the day. It's headed there, so we'll see what happens. It is 10:07. Now 10:10. I'm going to
order pending.
Move my stop to 51.40.
Order canceled.
That's just an arbitrary dollar move, and if that's taken out, it would be plus 20 ticks gain cumulative on the dual order here. I'm looking to move the stop next to 30 and then 20. If they go down and hit 51.20, then I'm going to move that stop to 51.30, and then if they dip below 51.20, I'm going to move it there. If they slam it below 51.20, I'll just jump it there. So those are the two moves that I'm waiting to do, and if I can get that far, then I'll reassess what comes next. So 51.30 at 20, 51.20 below there, and hold and see what happens after that. Keep squeezing it down. If they come up and take this out, then that's plus 20 ticks cumulative in a choppy, rangy day, and then I would probably just sit back and reassess the situation. So from here, there's no possible downside. Anything that happens is going to be positive. 10:11 Eastern. Okay, they zipped it down to below 51.20, and they're reflexing around there. I'm trailed to 51.29, and that's going to accept slippage.
Order
if they
filled.
take it out, they took it out. Well, there you go. Whipped and zipped. You can see where they hit that 233 objective there, just about to the tick, but they did that on a algo whip. So there wasn't anything I could do about it. I couldn't. What the heck? I couldn't get my stop down to. Trying to remove that. See how they hit that almost to the tick, right down there, at the 233, and then they just snap back up. One of those ripsaw moves. And so the best I could do, and that's why I jam the order in, because crude oil is so explosive right now, so whippy and rippy and whatever. You've just gotta be sitting right there. It takes my full attention. I don't have the reflexes, the cognitive skills anymore. Maybe it's because I'm pushing 51 years old. Maybe the market's sped up that much, or maybe both. But I don't have the physical, mental ability to follow more than one symbol when that symbol is crude oil. This takes every ounce of energy I have in concentration. But the good news is we have it dialed in. So there you go. 42 ticks cumulative today. Max draw was minus 12 ticks cumulative, and I'm done. 10:13. Back to work tomorrow, 7 a.m. Eastern. See you then. Have a great one.